Last week I told you that the smartest trader in the room isn't a person, it's the crowd. Today I'm going to show you exactly what that means when a trade goes beyond your wildest expectations. The top traders in the world were watching MicroStrategy, MSTR, and their wisdom setup for December 1st, 2025 was short MicroStrategy at $179.25. When Crowd Wisdom signaled a short position on MicroStrategy MSTR at $179.25, the financial media was still debating whether this Bitcoin proxy was a genius play or a disaster waiting to happen. We didn't need to debate. The crowd had already decided. Multiple professional traders across platforms had independently identified the same critical vulnerabilities. MicroStrategy's Bitcoin purchases averaged between $80,000 to $100,000 per BTC. The stock had already dropped 60% while Bitcoin itself rallied. The MNAV, market to net asset value danger zone, was approaching. Technical resistance at $184 to $189 was holding firm, and sentiment tracking of the best traders in the world showed waning investor confidence. This wasn't speculation. This was convergence. Professional traders using different methodologies arriving at the same bearish conclusion. That's the power of crowd wisdom. The trade precision entry and adaptive execution. Original entry, $179.25, target 1, T1, $173 target 2, T2, $167 target 3, not originally published, $158, stop loss, S1, $184.50, confidence level, 68%. Here's where it gets interesting and where crowd wisdom truly proves its worth. What actually happened? Better than planned. The market opened with MSTR gapping down past target 1 at $173. For most traders, this would trigger panic. I missed my entry, or the move is over. Not when you're following crowd wisdom. We immediately shorted the gap down and rode the momentum all the way to an unannounced target 3 at $158. Let's break down this journey. Phase 1. The original call. Entry at $179.25 with targets at $173 and $167. The crowd identified structural weakness that suggested downside momentum. Phase 2. The gap. Down. Market opened below T1, confirming the bearish thesis with violent conviction. Rather than sitting out, crowd wisdom recognized this as acceleration, not completion. Phase 3. Re-entry and ride. Immediately reshorted on the gap down. The same factors that drove the original call, over-leveraged Bitcoin exposure, technical breakdown, sentiment shift, were now amplified by panic selling. Phase 4. Target 3. Achievement. Price crashed through T2 at $167 and continued to an implicit target 3 at $158. From original entry at $179.25 to T3 at $158, that's an 11.9% move in the predicted direction. For traders who reshorted the gap and managed the position dynamically, the returns were even more substantial. Here's the critical insight. The crowd wisdom framework didn't just call the direction, it gave us the confidence to stay with the trade when it accelerated. Why the gap down wasn't a surprise. Here's what separates crowd wisdom from random luck. The gap down confirmed the thesis, it didn't contradict it. Professional traders in our synthesis had specifically identified cascade potential. The over-leveraged Bitcoin exposure meant that once selling started, it would likely accelerate. The gap down was the market's way of saying, the crowd was right, and it's worse than expected. Technical void. Below $173, there was limited support until the $160 area. Multiple traders had noted this in their analysis. The gap down simply fast-forwarded through that void. Sentiment panic. When a stock gaps down significantly, it triggers stop losses and margin calls, creating a cascade. The crowd had identified MSTR as vulnerable to exactly this type of technical breakdown. No fundamental changes to save it. MicroStrategy's Bitcoin purchase prices didn't improve overnight. The MNAV risk didn't disappear. The gap down was simply price discovery catching up to fundamental reality, faster than anyone expected. The adaptive advantage of crowd wisdom. Most trading systems fail when reality exceeds expectations. Crowd wisdom adapts. When MSTR gapped down past T1, three things happened simultaneously. Thesis confirmation. The gap validated the bearish case with extreme prejudice. Every factor the crowd identified, leverage risk, technical weakness, sentiment fragility, was now operating in overdrive. Momentum recognition. Professional traders in our network immediately recognized this wasn't a one-and-done gap. The velocity and volume suggested continuation, not exhaustion. Risk reassessment. The gap changed the risk landscape. Re-shorting at a lower level with momentum still intact offered a new high-probability setup, even though it wasn't in the original plan. This is the difference between rigid systems and intelligent aggregation. Crowd wisdom adjusts to market feedback in real time because it's synthesizing live professional trader reactions, not following a static formula. What you can't learn from a single guru. Here's something critical to understand. No single analyst called the move to $158. Some traders emphasized the MNAV danger zone hit. Others focused on technical resistance failures confirmed. Some highlighted Bitcoin correlation breakdown validated. Others tracked sentiment shifts in real time accelerated, and several recognized the gap down as a re-entry signal crucial. The crowd wisdom synthesis combined all of these perspectives and adapted in real time to deliver an 11.9% directional move, even when following the gap down. That's why following one expert will always be inferior to aggregating multiple professional viewpoints. Markets are complex adaptive systems. Understanding them requires multiple lenses simultaneously, and the flexibility to adjust when those lenses reveal new information. The confidence framework in action. Notice that this trade started with a 68% confidence level. That confidence level dictated moderate initial position sizing, defined stop loss at $184.50, mental preparedness for the trade to work or fail. When the gap down occurred, the confidence level effectively increased. Why? Because the market validated the thesis with explosive confirmation. That's when position sizing could be increased through re-entry. This is how professionals manage risk. Dynamic conviction based on market feedback. Static conviction, I'm right no matter what, gets you killed. No conviction, I'll wait and see, gets you left behind. Dynamic conviction guided by crowd wisdom gets you from $179 to $158. The original analysis embedded. Here's the original crowd wisdom analysis published before MSTR gapped down. MicroStrategy's leveraged Bitcoin exposure was identified as a structural weakness. The 60% drop while Bitcoin rallied was flagged as a warning signal. Technical resistance zones were pinpointed to cap rallies. Macro catalysts like Powell speeches and PCE data were predicted as potential triggers for volatility. All of this was laid out before the gap down. The crowd saw the vulnerability. The market simply delivered the execution. The pattern repeats. This crowd wisdom approach that nailed MSTR's collapse also identified Goldman Sachs's failed breakout and bearish setup at $781.26. It uncovered sector-wide banking fragility before mainstream coverage and identified technical failures that preceded significant moves across multiple names. When you aggregate professional trader insights systematically, patterns emerge that individual analysis misses. The crowd sees what individuals cannot and adapts faster than any single voice. The real edge. Knowing when to press. The difference between a good trade and a great trade isn't the entry, it's knowing when to press your advantage. MSTR could have stopped at T1. Many traders would have taken profit and walked away with a 3.5% win, but crowd wisdom recognized the gap down as an acceleration signal, not an exit signal. That recognition, synthesized from multiple professional traders observing the same violent price action and reaching similar conclusions, turned a 3.5% trade into an 11.9% trade. That's a 3.4 times improvement in returns from the same directional call. And that's the edge you get when you're not trading alone. Your two choices. You can spend 20+ hours a week trying to monitor multiple professional traders across platforms, track sentiment shifts in real time, synthesize technical, fundamental, and sentiment data, identify convergence points across independent sources, recognize when to press positions as markets confirm your thesis. calculate proper position sizing based on evolving confidence levels. Or you can let crowd wisdom do it for you. Every week, we synthesize insights from professional traders, aggregate technical and sentiment data, and deliver clear directional signals with specific entries, targets, stops, and confidence levels. And when the market delivers like MSTR gapping down, you get real-time guidance on how to adapt and capitalize. Stop trading blind. Most traders lose money because they're operating with incomplete information and emotional decision-making. Crowd wisdom solves both problems. Complete information aggregated from professional sources, emotional discipline driven by predefined data signals, and adaptive execution based on real-time synthesis. You don't need to be smarter than the market. You need to be informed by the crowd and flexible enough to adjust when opportunity exceeds expectations. The next opportunity is forming right now. Do you want to make the top trader work for you? Join our free weekly update at crowdwisdomtrading.com and get weekly stock signals with clear direction and confidence levels, specific entry points, profit targets, and stop losses, real-time synthesis of professional trader insights when markets move, adaptive guidance when trades accelerate beyond original targets, technical and sentiment analysis you can act on immediately, and track record transparency. We show you what works and what doesn't. What's the crowd saying about next week? Find out before the market does.